All right, that was the finance minister, and looks like it is going to be SBI will be now the will own 49% stake in Yes Bank. I'm going to stay and introduce our panel now. Mukesh Jain, corporate lawyer, founder of Mukesh Jain and Associates, Anil Singhvi, and then ED Now's consulting editor, Mythili Bhusnurmath. I'm going to start with the lady first on the panel. And Mythili, good evening. Thank you for joining us. On expected lines, SBI has turned out to be the white knight once again. We can agree, we can disagree, but that is the end and the beginning. That is the beginning and the end of the story.
Yes, unfortunately so. I think every time a private sector bank gets into trouble, it's invariably the public sector bank which is forced to pick up the tab. And we are told that the SBI is willing. Now, whether willing is with a gun to your head is really very difficult thing to say. But the fact is that ultimately we know it is the public sector bank which is forced to pick up the tab. And that we're seeing once again in the case of SBI, and it's picking up 49% in a bank which I think nobody was willing to touch. If I may use that other extreme example, touch with a barge pole. So that really is a form of restructuring. The authorized capital has been changed to 5,000 crores. SBI has been told to take a stake of 49%, and it cannot reduce its stake to less than 26% before 3 years. The board has also been restructured. It's because we're going to have 6 members, 2 of which will be from SBI. RBI has the right to appoint nominees. But for the rest of the press conference, I think the FM was basically trying to justify, the action that has been taken and also point fingers at the previous government and say, look, we're not the only ones. Similar things have happened in the past as well. Now, whether this will be enough to put Yes Bank on its feet, and whether this kind of moratorium was a needless pain inflicted on Yes Bank depositors, investors, and the financial sector and the economy, will always remain a question mark.
Okay, Anil Singhvi, let's get a comment going from you as well.
It's hilarious to say the least, because this bank has been in trouble for last several months. And under the eyes and nose of Reserve Bank of India, the management fooled Reserve Bank and depositors for last several months on that, on some tricks or the other. We all have debated in the media what kind of quality of the investors bank was looking at this. So I think Reserve Bank has allowed this pass to come for last several months on Yes Bank. And today they reached to a stage where again you have to call on State Bank of India. Earlier it was IDBI when LIC was called to bail it out. Now it's a State Bank of India. I don't know how long will we use the public funds to salvage these. I would call them adventures. These are not banks. These are adventures.
Okay. All right. We have Ajay Srivastav as well joining in. So, Mr. Srivastav, let me go across to you. Looking ahead, looking forward to the future, SBI is going to be owning 49% in Yes Bank. How exactly would that change things for the Yes Bank franchise, for the shareholders of Yes Bank, for the shareholders of, even for that matter, State Bank of India? What are the challenges as well before SBI with their 49% stake in Yes Bank?
I think this is going to be a lot depends upon the fact that what kind of run this bank will have once the depositors are allowed to withdraw the money. State Bank coming in it's not telling us that when the moratorium will be lifted on the withdrawals, because I think it doesn't matter whether State Bank comes in and with a 49% cap. If you were a prudent person, you would tend to take your money out. So I think Yes Bank is dead. In my view, is dead as a franchise, is dead as a company, as a separate company. Would you put your money just because State Bank has put some equity and again go back in the queue next time there's a moratorium? No, the answer is no. So to that extent, I think it's I don't know. If this was a solution that they could have gone to Ravneet Gill and told them, listen, SBI will put in the money, and RBI governor could have called him and done the share issue in 30 seconds. So, I'm not very sure whether this RBI intervention now was an afterthought or was it pre-planned, but certainly it didn't look to be a pre-planned item because they didn't have to.
But Ajay, it could be a last-minute rescue also, because in our interaction with Ravneet Gill, and I'm sticking my neck out as the managing editor of ET Now and saying this because every time he came on the channel, he said the following: I am close to raising capital and I will announce a capital raise very soon. And he defined very soon as before 31st of December. When I asked him that how about Christmas holidays, he said, no, Nikunj, we are very confident of raising capital. So I guess somewhere, I'm not saying Ravneet Gill was not calling, was not giving the right messaging. Maybe it's the circumstances which did not go in the way of, Yes Bank's fundraising. So Ajay, now the question is, the overhang of Yes Bank is out of the system. Should we be celebrating that, or should we be worried that the other companies, other NBFCs where overhang is there, they also need a rescue and they will expect a rescue.
Of course they will. Nikunj, you spoke in the morning. I'm saying we are still not addressing the issue. The issue is partly, I'm not saying there could be malfeasance, which is unproven so far. At this point of time, there is not a single case against Rana Kapoor which says he made money out of giving loans to the bank. So give him the benefit of doubt. He set up this bank. Okay, it didn't go well. Partly the fact is that the economic slowdown has seriously impacted companies' abilities to pay money back. The Supreme Court judgment which came out on the mines case, etc., took the coal mines away. Now, all those came and impacted people's ability to pay the money back. And if you're not going to address it, you'll have more of these. Now when the next bank goes down, and I can reasonably sure, if you look at the state of IDBI bank today, it's not healthy at all. There are 3-4 other banks which have come out. They're not healthy at all. Now the question is, one is who's going to bail them out? Two is, if you are a depositor today in any of the smaller banks, if you are not taking the money out, then you got a serious problem in your head. So I think, this short covering by saying, okay, SBI will put some, what will SBI put? 20,000 crores. Okay, then what happens after that? When the money goes out of the system of a Yes Bank, what will happen after 20,000 crores is exhausted? I think this is a very incomplete solution. Perhaps it's been done in a hurry. It'll come back to do it. But what you said is correct. Economic slowdown means people can't pay back loans. People can't pay back loans. The credit system is at this point of time. So they have to come up with a bigger solution, comprehensive solution, or you'll keep doing a DHFL. Look at ILFS. Has it been resolved? No. People have taken 80,000 crores of write-offs, Nikunj, at this point of time. So therefore, none of the problems are being resolved because we are not trying to find the solution. We have to learn from America. We discuss the TARP plan. Whether moral hazard is there or not there, let's go away from it. Let's avoid politicking. Let's get this economy right. I think the time has come to really take hard decisions to get the economy right, or you'll have many more Yes Bank down the line. We already have ILFS unresolved. We already have IDBI Bank eating up cash like nobody's business. We have 3 other smaller banks having serious problems. How much more will come to the table, I don't know.
I mean, the system is already plagued with a lot of stressed assets out there. There's no two-way telling that. Mukesh Jain as well joins us. Mr. Jain, Ajay was talking about it being an incomplete solution of sorts. And come 3rd April, come 4th April, when the moratorium ends, there's no doubt, and there's going to be no doubt in anybody's mind that they need to run to Yes Bank and withdraw whatever money is lying over there. So is this solution of SBI pumping in the money that it is with that 49% stake, is that going to be enough to amp up Yes Bank with the money that it needs?
See, we have to be concerned about the depositors who have put almost 2 lakh crore rupees in Yes Bank. Therefore, the solution which State Bank has come up with, in the limited perspective of Yes Bank, it will give a lot of confidence to the depositors that yes, there is a change of guard. It is not the amount of money actually which SBI pumps in. The more important thing is a signal that there is a change of guard, and that infuses a lot of comfort and confidence. Talking about the banking system as a whole, my thought process is that banking is nothing but a miniature version of the macroeconomy. More so in banks like Yes Bank, which are engaged in wholesale banking. So their credit portfolio is directly impacted by the trends and events in the economy as a whole. Whether it is economic slowdown, whether it is the judgments of the apex courts, which are well-meaning, but they create havoc on the industry. And industry having heavily borrowed from the banks, it reflects in the financial health of the banks. So there has to be a systemic solution. Having said that, commercial banks right from independence, they have had an implicit sovereign guarantee. And that is why people are having confidence to put their money in the banks. Having said that, I entirely agree that this moratorium could have been avoided. It has caused unnecessary missed beats, and as it appears that the solution was already in hand.
Sandeep Parekh also,
it could have been announced without the moratorium.
Fair point. Sandeep Parekh also joins us. I need to get a very quick reaction from him. Sandeep, prima facie, is this more like a band-aid approach that 31st March was coming? Yes Bank was not able to raise capital. I mean, if this surgical strike would have not been done, then it would have created a issue. But do you think this is more like a band-aid approach, and this surgical strike is not a long-term solution?
Hi. So I think that this is definitely timely. I don't know. We can always argue whether they could have done it 15 days back or a month back. But they've made several attempts to contact. Let's assume that they honestly did find investors and they were not able to close them. And there's no fraud and misrepresentation involved. Even assuming that, they've tried for many, many months now. It's been probably 4 months since they first started looking for capital. In the absence of finding any investors for the bank, there's no other option but to kind of rescue the bank because, their net worth is probably, nobody knows the exact number, but it's probably negative as of now. So, for the sake of the depositors, for the sake of the sanctity of the, the trust in the banking system, for the general, many of your viewers would have got WhatsApp messages asking people, whether my money in XYZ bank is safe or not. So, the whole issue with a scare on a bank deposit has huge impacts way beyond the banking system. And therefore, I think the rescue was, I won't say timely because I don't know if it could have been done 15 days back or 1 month back, but it's certainly very, very, very useful. And I also believe that it's really not a band-aid. It's a very critical move because, it's not a merger between two private banks. RBI is forcing kind of the bank to be acquired by public sector. And as soon as you put public sector color into the spectrum, automatically there's kind of an implicit sovereign guarantee attached to it. It's not explicit even in public sector banks.
Right.
But this will give a lot of comfort to depositors.
Okay. This will give a lot of comfort to depositors. So very clearly, this is a bailout for the depositors. Equity shareholders, we've always maintained that when you're buying equity, you take a risk. Stock goes higher, you make money. Stock goes low, you lose money. Okay, Anil Singhvi, back to you. Our initial backup envelopes calculations are suggesting that State Bank of India in this case will have to essentially invest about 12,000 crore in Yes Bank. 12,000 crore is what SBI will have to invest even if they invest at the current 10 rupees for 49% stake. Now, Anil Singhvi, from where will SBI get 12,000 crore? And if they are using 12,000 crore, that clearly means that they will have to raise tier 1 capital. Either it will slow down their lending or they will have to perhaps raise more capital by selling subsidiaries or by going to the government.
Let me ask this question, Nikunj, that what is State Bank of India getting out of this whole mess? It is just a bailout for Government of India and for Reserve Bank of India, nothing more than that. It's a listed bank. You must now have a fund available to Reserve Bank of India. If they want to recapitalize the bank and run it, let the Reserve Bank of India put in the money like how the Fed did it. How can you use State Bank of India's money for bailing out a bank which has been into problem for such a long period? And let me dwell for another 1 minute. Each one of us are shedding the tears for the poor deposit holders. Look at the plight of the minority shareholders. Why did RBI and SEBI give approval to Yes Bank to not to give the results of 31st December under the garb of raising capital? What is it? Every investor who wants to invest money needs to know what is the health of the company or the bank. Why did they give that they can publish the results until 14th of March? And how are the results of 31st December? No one seems to have asked this question anywhere on that. People should know what is the health of this bank. And even State Bank of India. Now today you can't have a situation where State Bank of India knows and a minority shareholder doesn't know about the health of the bank.
Okay, you're raising valid points. We are raising valid points. I've got to go back to Mythili. Mythili, I'm making an assumption here. 12,000 crore is what SBI will have to pump in. I don't think 12,000 crore is a small amount for even SBI. I know they're sitting on surplus liquidity, but it was not meant to be used for Yes Bank, which means they may go to government for a recap. If they go to government, I distinctly remember, Mythili, when we covered the budget this time, the finance minister did not make any mention of bank recap. That is not part of a budgetary calculation. So the circle is going to start again, Mythili.
Oh, absolutely. Nikunj, the question is this the best use of SBI's money? Because as Mr. Singhvi said, SBI is no longer a completely government-owned bank. It is a listed bank. So there are retail shareholders, private shareholders. Are they okay with your doing this? And if you do this, then tomorrow when SBI is to approach the market, will anybody want to buy an SBI share knowing full well that the government will use it to bail out whatever bank gets into problems? So if at all the government wanted to bail out Yes Bank, and I say if at all for the simple reason that if you look at the Yes Bank's balance sheet, the last published balance sheet, its net worth is positive. That means it was in a position to pay all its depositors as and when required. Now, subsequently, if the net worth was going to turn negative because of the losses under NPAs and provisioning that was made, could not RBI have made some kind of regulatory forbearance and given Yes Bank some kind of a rope rather than put a moratorium and spread this kind of panic amongst depositors, not only of Yes Bank, but of all bank depositors everywhere? So I think it's very important that government thinks that if you want to bail out a bank, do it directly with taxpayer money, which is what even a country like UK, which is among the forerunners of privatization, in the case of Royal Bank of Scotland after the 2008 crisis, the UK government nationalized the bank. Today we may not want to nationalize the bank because they're scared of the word nationalization. But this kind of backdoor forcing of State Bank of India to pick up a share, regardless of its retail shareholders, I think is grossly unfair. I think the government and the RBI have much to answer for. Yes Bank's troubles have been known for 2 years. What was RBI doing? And the SM says she's asked the Reserve Bank of India to write out a report on what went wrong. This is like asking Steve to set out, some kind of justification of why he stole. I think RBI's supervisory role has come up, huge questions about it. ILSS, Yes Bank, PMC. So I think we need to know where the rot is and not penalize depositors and harm the banking sector and the economy at large. Yes, when the economy is going through a slowdown, what you need is counter-cyclical regulatory measures, instead of which RBI progressively tighten the screws in a slowdown. And that really is the cause of the problem, apart from the amendment made in Section 29A of IBC, which automatically tarred all promoters as crooks, as defaulters, regardless of why the default had happened.
Okay. Taking that point forward then, essentially using SBI, trying to, salvage another bank situation, that's Yes Bank. Ajay, Mythili as well mentioned, in the budget, she had said that, look, no more PSB recapitalization. If they want money, they'll just simply go to the market. And I think it's interesting also to open the fact that LIC has been kept out because they want to take LIC to the market. And I mean, in the past, it's been LIC usually that's been government's go-to buy that, okay, I want to get rid of an asset, let's get LIC to buy it, right? We've seen that in the past. Do you think that this would sort of be much to the detriment of, your retail shareholders of SBI, to the financial system in general as well?
See, let's be honest about it. At the end of the day, the retail shareholders of a nationalized banks, if they're there, they must be stupid at the end of the day because they know how these banks are run and there is nothing there. But there's a broader implication. Number two is I am very clear that this investment is a precursor to a merger with SBI. There is no way I can imagine Yes Bank can continue a separate entity after 12 and a half or even 20,000 crores of cash, because I know depositors will pull the money out the day they allow them to pull the money out. So this is just a precursor. When the demand will become too much, they'll say, okay, we are merging with SBI to stop the bleeding. So let's assume the fact that there will be merged with SBI. But this has got very big implications. On one side, we want to do PSU disinvestments and raise money. On the other side, we use these vehicles. We've already seen LIC, IDBI Bank. Now we're seeing SBI, Yes Bank. That's not the problem. The problem, in fact, let's assume they use the money correctly and we bail the system out, etc., etc. The problem is now next one goes to which one? That's a key question. Okay, you might merge Yes Bank and hopefully take care of Yes Bank. And I think, Nikunj, the good part is I don't think SBI has ever got the bailout money from the government so far, if my memory is right. So to that extent, they will sell another 10% holding in SBI cards and raise the 12,000 or 15,000 crores. So I think we can assume it's a merger, but implications are you can't disinvest PSUs if you use them like this. And third, to my mind, it's amazing. How was RBI imagining that in a 3 to 4 month window, a fundraising of a Yes Bank can take place? Government of India is doing Air India, BPCL, now LIC. They know a fundraising takes minimum 6 to 9 months. The due diligence team comes in, the agreement gets drafted, etc., and in a problem like Yes Bank. How are we assuming there's going to be 3 months? I think there's so much naivety around this bailout that it's, if it was not involved a 2 lakh crore, you might even find little funny as to what the hell is happening there. It was really, a circus of incompetence, if you ask me, all around to say how to handle Yes Bank.
Okay. Mohit Jain, we've not been able to come to you as much as we wanted. Please appreciate we're trying to, compress a lot of opinions here. But my question to you, Mr. Jain, is the following, which is that what happens to the minority shareholders of SBI, not Yes Bank, I'm keeping Yes Bank aside, but there are SBI minority shareholders also. Why should they be bailing out Yes Bank? That's the first thing a global investor would ask. SBI went on a roadshow a year and a half ago saying that all is well with our book and our balance sheet has, our books are bottomed out.
Well, it's a very pertinent question. While trying to balance the equities, when I say balance the equities, balancing the interest of the depositors of Yes Bank in a welfare state vis-a-vis balancing the interest of the minority shareholders of SBI. Undoubtedly, the minority shareholders of SBI are going to feel shortchanged. Seeing it from that limited perspective, I'm afraid SBI may be hard put to find the answers to this question. Having said that, from the overall economic perspective and from the perspective of the retail depositors of Yes Bank, I'm not going into what could have been done, whether funds could have been raised in 3-4 months or not, or whether even a binding term sheet could have been obtained. Regardless of all that, it is equally important to protect the retail depositor so as to protect the sanctity of banking, there's no gainsaying in saying that banking as a sector its importance can never be overstated. So it is some sort of balancing of equities where undoubtedly the minority shareholders of SBI will be left without answers. There's no point in arguing this way or that way and trying to assuage this subject. Faced upfront, there are probably no answers.
I'm glad you're being honest here. Sandeep Parekh, a year from now when we will look at Yes Bank bailout, what needs to be examined more? That here's private sector banks who were considered to be holier than thou and they had an image that they cannot do anything wrong. Even private sector banks are not safe. Or will it be remembered as a sequence of event where the regulator had some oversight of the accounting practices of Yes Bank, or the Yes Bank episode will be remembered as an episode where somebody else messed up but the good money was thrown to protect bad money? Sandeep Parekh.
Right. So I think this is a very attractive argument, but it's completely wrong, and I may be the minority view in this panel, but I think it'll be a great outcome if SBI bails out Yes Bank. And the reason I say this is because, with a 49% stake and an implicit guarantee by the government, there's no explicit guarantee, the bank can survive in a much sunk form, right? So whatever the investment which SBI makes is, it's likely to kind of get its money back, so to speak. Secondly, I think we're talking about very small numbers in terms of few hundred crores of investment by SBI. And just look at the Ireland affairs, which is much smaller, in terms of its impact on people, common people. And I mean, to save these 500 crores, I mean, you'll be looking at lakhs of crores, which are adversely impacted because people lose faith, not just in the banking system, but the general system itself. So we're looking at a very, very huge scale. And it maybe, we can make moral arguments all we like, but the downside is just too great for us to save these 500 crores, assuming that it's a sunk cost. I don't think it's a sunk cost. I think SBI will actually make money if this actually goes through.
Ajay Srivastav, it's a fair point. Government bailed out, or US government used the TARP money to bail out the banks. and ultimately that turned out to be a profitable investment. Let's look at it this way. India is an understaffed banking industry. Yes Bank has a decent franchise. They have branches, they have technology, they have talent. SBI may end up actually 3 years from now, 4 years from now, may actually benefit and make money out of this investment. Ajay Srivastav.
Well, I wish we were all dreaming, Nikunj, and I can dream it on and again and again. And I keep saying this, that bank is about trust. It's not about computers. It's not about franchise anymore. It's about trust. If you are a depositor, will you trust? It doesn't matter who it is. Will you trust putting money in a Yes Bank versus an HDFC Bank or an ICICI Bank or a Kotak Bank? Unless a Yes Bank offers you 3% or 5% higher interest rate, in which case it will have to do exactly the same what it did this time, lend to the riskier segment of the assets. So State Bank coming in is not the answer, because State Bank itself is no pain to a competence of any kind as an institution. If it was, if HDFC Bank was putting in the money, I would be the first person to say I would put my money along with Aditya Puri and HDFC Bank. But would you put your money along with State Bank? The answer is no. Number two, the fact is that the reason moratorium came in, because obviously the liabilities far exceeded the assets. As my Mythili is saying the correct thing, you make it so rigorous that now capital is zero, which means the fact that your depositors' money is now much more that you have to repay than your assets can get you, and assets will come in a much longer time frame. There are contractual loans of 3 and 5 years. They're not going to get paid, but people can prematurely encash or fixed deposits. They can certainly do it. Loans can't be prematurely asked to be repaid. Deposits can be. So you have an asset liability mismatch on the table. I may be wrong. I may be imagining things. I hope it doesn't do well. It goes like this. I hope all the return as Sandeep is saying happens. But in my life, I've been a banker to start my life. I have not seen banks surviving which lose trust. At the end of the day, thanks to the moratorium, the trust has gone. That's why I said, same transaction done 30 days back with a structured lending coming in 20, 30,000 crores could have done a different magic to this thing. Once a moratorium, then you're kissing goodbye to this bank. And I think that's my view. So SBI making money off it, I don't think. My personal view is it will be finally merged because the liabilities overwhelm the limited capital that is being put in.
Mythili, let's look at typically as journalists, as members of press, we like to write and remember. And as someone who's tracked the banking sector for more than 35 years, how do you think the Yes Bank episode should be remembered? It should be remembered that private banks can also fail, or an episode where Reserve Bank of India did not get grip of the accounting, or SBI was used rather harshly stroked smartly to bail out Yes Bank?
I think it will be all three, Nikunj. It would show that private sector banks are not the be-all and end-all and anything. You can have failures. In fact, Global Trust before this was also a private sector bank led by a banker who was known to be very savvy, and that also failed. So I think it will be remembered for all those three reasons, that private sector banks, they also have feet of clay. It's not just a public sector bank. That RBI was caught napping, not just once, because this is only the latest example of with supervisory role being its Achilles heel. Particularly under the previous two governors, where the focus was entirely on monetary policy and inflation control. And last, of course, how public sector banks are always being used, as whipping boys, as it were, because they're asked to pick up the tabs whenever things go wrong, and yet they're blamed for everything whenever anything does go wrong. And most importantly of all, I think we really put paid to any chances of any of the retail investors coming into public sector banks, because they'll know this is what happens anytime a bank is in trouble. It is a public sector bank that is asked to bail them out. So why should we enter? So I think that is going to be another factor that we have to keep in mind, because hopefully sometime we will disinvest even in public sector banks.
Okay. I'm going to throw this question wide open, and Sandeep Parekh or Ajay Srivastav or Mohit Jain, anyone can pick it up. India has always commanded, Indian financial sector has always commanded a premium because of better governance. That explains why foreigners, they own 75% stake in HDFC Limited, large part of the ownership of HDFC Bank or Axis Bank or HDFC Bank is owned by foreigners. So for an outsider who thought that Indian regulator was the best, Indian financial system was very safe, what should be the first impression looking at Yes Bank and what is happening here?
See, a little while ago, we were talking about public sector versus private sector. the malaise of the two. Now let us see Yes Bank vis-a-vis a public sector bank. In public sector bank, the problem is the work culture. Whereas in a private sector bank like Yes Bank, for example, probably it was a business model, excessive concentration on wholesale banking, which makes you more vulnerable to the headwinds in the economy. That was probably the undoing. Therefore, going forward, I would say the lesson to be learnt is a wholesome, balanced business model, having a proper balance between wholesale banking and retail banking, because in retail banking you are mainly at the financing the consumer end of the borrowers, who do not rely upon the fund generating capacity of the asset being financed. Talking about your question as such, as to how the foreign investors will perceive our regulator, save and accept that this moratorium could have been avoided. I would not be able to agree that our regulator has not been up to the task. As a matter of fact, as it seems, the bailout package was already in the works when the moratorium came, and I entirely agree with the other panelists that the moratorium leaves a scar on the psyche of the depositor, which was strictly avoidable both for the Indian depositor as well as the foreign potential investors. This kind of mishaps, I would say, I call it a mishap, are strictly avoidable, more so in a situation like this, which has not germinated overnight, which was there for all to see, and more than that, the package of bailout was ready, and still we had to have a moratorium for it to be announced within less than 24 hours of the moratorium. There is something wrong in our handling of the whole thing.
Ajay Srivastav, let's talk brass tacks here. Stock markets, when they will open on Monday morning, do you think there's a surprise element in the bailout package?
I think stock market will have a kind of relief that this bank is going to be a separate bank at least. So there is some hope for the equity investors, to my mind. Today was complete despair because moratorium meant that the bank has disappeared. Now at least it's coming out that the bank will remain a separate bank. So there is still some hope. The share price has dropped, to almost 5 rupees today. So and there's been a reduction of capital, but that's par value. It's not reduction of the number of shares. So to that extent, whatever shares you were holding, you would still hold the shares. The Indians don't really understand par value, so that's fine. That's a clever, good gimmick done by them. And I think there'll be some hope that things will turn out right. As far as equity punters are concerned, we are back to the races. I think it will relieve to the share price, and I believe the share price should be edging up on Monday as we open, because now we know that at least it will be a separate institution for the next few months to come. And when there is a merger, if at all, there will be some exchange ratio. So value is not zero. I think that's a big relief that Yes Bank shares value is not zero today.
Sandeep Parekh, I want to agree with Ajay here because the risk is over from a stock market standpoint. I know it's a very myopic kind of a view, but if you have to address from a stock market standpoint, and I know you're not an expert here, but I would insist that how do you think stock market investors and equity investors should look at this thing?
So that's kind of probably the trickiest question to answer, but here's my guess. I mean, there are two things which are possible. One is Yes Bank survives as a separate entity, but it's a much smaller entity because, once the net worth has gone down and you just have a few hundred crores coming in as like new equity, your the asset size also has to shrink eventually for it to sustain, So that's one possibility. And the other possibility, it gets merged with SBI or some other public sector bank. In both cases, given that I think today's update is that SBI will invest not at 2 rupees per share, but at 10 rupees per share, then I think given that the net worth is probably close to zero or minus as of now, depending on what are the kind of real NPAs, investors will actually gain over the kind of long term, once if there is survival or if there is merger. And that will obviously have to mean that other debt securities, tier 1, tier 2, etc., also get honored. So again, it's dependent on a lot of ifs and buts and a lot of variables. But there is a chance that the shares will be worth more than zero.
Okay, fair point. Well, I'm just going to take a detour and talk about crude prices. I mean, there's a world we need to worry about, which is what's happening because of coronavirus and what is happening to the world because of, demand slowdown. So just to mark a mention here, this live bulletin, so I need to mention the live rates in Europe and what's happening there, 3.5% down for European markets. And then you've got a cut off almost 5% collapse in the price of crude. So yeah, the world's not going through a very nice state, so to speak. There you go. That's where the total maths comes in, how much SBI will have to invest and how much stake they are likely to take and what will happen to the authorized share capital of SBI. Okay, Ajay, Yes Bank had a decent single-digit market share in the market, both in terms of deposits and also in terms of the total loan. That market share now goes to somebody else, which means that whenever the markets will settle down, private banks, the 2 or 3 private banks, they perhaps have an edge now?
Of course, they have an edge. That's what I mentioned that, listen, if it was HDFC Bank was an investor, I would have gone along with the scheme in a minute and a jiffy. So if you were a prudent depositor, you would now have to gravitate towards 2 things. I think it's very important. One is you'll gravitate towards a bank like HDFC Bank, where we have an equity holding for disclosure to that extent. We are biased to that extent. There is a Kotak Bank, which is decent, but, HDFC perhaps is more institutionalized because of HDFC and HDFC Bank. So if you were looking at the hierarchy of banks you want to put your money, I guess HDFC Bank would be the number 1. So they will be, I think, the prime gainers from any of this kind of move, and not only from here. The number 2 gainers, surprisingly, is going to be the nationalized banks, because people are going to realize that the fact that let's go and put a FD in a nationalized bank, at least as someone mentioned correctly, that it is an implicit sovereign guarantee, at least there'll be no moratorium on a nationalized bank. So I think, for a funny way, this incident will actually spark deposits going back, in spite of poor service, to nationalized banks, because government people and or depositors are looking for guarantees to get their deposits back. Now we have actually touched the core of an Indian financial system called faith in where your money is in the bank. It's not a small one. It's a big jolt. People may think it's only Yes Bank, but imagine every single depositor, whether retired or somebody, is going to be sitting there and looking at his bank and saying, should I be keeping my money here? So I think we have done more damage than what I think RBI is realizing by this moratorium, that you will make the money move now from tier 2 banks to tier 1. And there are only 2 tier 1 banks in this country at this point in time, HDFC and Kotak. ICICI is still coming to grips with what the reality is. So maybe you include the third bank, is, I think. So and then the nationalized bank. So we are in a really troubled time for small banks.
Okay. Well, on that note, Sandeep Parekh, Mythili, Mukesh Jain, Ajay Srivastav, thank you so much then for joining us and helping us essentially decode this bailout plan of sorts that the government has put in place. 49% stake is what SBI will own in Yes Bank. They'll be pumping in money, but of course the question is this too small? Would it be enough, especially after the moratorium ends and depositors will line up to withdraw not just 50,000 rupees, but all of their money? And of course, how will things change even for the SBI as a bank, for retail shareholders especially? We'll continue our coverage on Yes Bank and lots more news and updates after this very short break.